Hi all, this is Dr. J at 11, coming to you streaming live from Long Island, New York, when it's an absolutely glorious morning and turning into an absolutely glorious sunny afternoon. Temperatures are going to get up to 68 as the Dow is starting to regain momentum to the upside. Took a little breather from the morning highs, but I'm confident, never confident, but I am fairly confident that it will finish the day strong, as will the NASDAQ, the S&P, and my newly acquired edition, amzn.com. I must say that I can give myself a pat on the shoulder for my call on Tuesday, saying that my call on Monday, excuse me, saying that tomorrow would mark the end of the sell-off. And it sure looks that way. I can, with some equivocation, always a little equivocation because the market is always as clear as mud, say that this sell-off is over and it's going to be up, up, and away for the SPX, the NASDAQ, and the Dow, as well as the FANG. So Dr. J has remained bullish throughout and is steadfastly bullish now, I think. In any event, I'm going to explain the ambiguities that still exist in the market, especially if you're an Elliott wave type person looking for clarity as to what the heck just happened. Was this sell-off a correction, usually of the form ABC? A down, B up, C down, three waves? Or was it the start of a bear market, usually of the form a five-wave impulse? Wave one down, two up, three down, three being the most powerful wave, four up, and five down. Well, the NASDAQ and the Dow, the good news is the NASDAQ and Dow says correction, ABC. It's clear as mud. I mean, clear as can be. And the Amazon and the SPX say five-wave impulse down, start of a bear market, perhaps. Of course, Elliott waves get around this by saying, well, there's various interpretations, and some have higher probability than others. So I'm going to talk more about that. But first, let me say, do your own due diligence. Let me remind you to do your own due diligence, study, make your own investment decisions. Dr. J's opinions are strictly my own, and they do not constitute any kind of investment advice. Seek an investment advisor. If you do like some of my ideas and want to follow me, check it out. In any event, also fact check me, because as I get older, my facts dwindle. Not that they dwindle. I make mistakes. I think I've been making mistakes since I'm 14, but getting older is a good excuse. What, since I'm 14? Since I was born. Who doesn't make mistakes? Well, before, I don't even know if I'm going to get to the charts because I don't really have that much time now. I think I'll save the charts for later, but after the market closes. But right now, the Dow is up sharply. The NASDAQ is up sharply. I can take a quick look just at my phone and tell you where everything is at. NASDAQ, the NDX is up 158 points to 69.68. The Dow Jones Industrial Averages up 300 points. Amazon.com is up 63 points. And some people are persistent callers. I don't know what to do with them. I have to take the phone off the hook. Phone off the hook time. All right, so that's what I'll do. I'll take the phones off the hook and silence this one. I'm sorry for the interruption, but the most persistent caller of them all is my boss, my wife. Isn't that the case? I'm going to get women mad at me now that the wife is the boss. But why are you mad at me? Why? It's true. Usually the wife is the boss. We just think we're in charge, but we're not in charge. In any event, so the ambiguity in the market exists. Oh, come on. The ambiguity in the market exists. I thought I silenced it. Now I'm muting it. How does it exist? Because I explained to you that there's an obvious ABC correction in the Dow, obvious ABC correction in the NASDAQ, obvious 1, 2, 3, 4, 5 down impulse wave in the amazon.com and the SPX, more importantly in the SPX. Clearly, you could have a bear market in any given stock while the rest of the market is bullish. I mean, Amazon could go into a bear market for whatever reason. As long as the other three indices are bullish, doesn't mean anything. But the SPX is showing bear market, and the NASDAQ is Amazon.com is showing bear market. So we're half and half. How do we resolve that? Well, Elliott Wave gurus always leave themselves a way out. One way out is saying that the ABC correction is really a 1, 2, 3 so far down, where we're entering wave 4 up, and then we're going to start wave 5 down, and therefore the Dow and the NASDAQ will quote unquote catch up to the SPX, which has already defined itself to be in a bear market. That's one interpretation. Well, the other interpretation is the SPX just shows 5 waves of wave A down, and it's entering wave B, while the Dow and the NASDAQ are entering wave 1 up. Now I'm doing a lot of waving, so I'm probably losing you. I am going to show you all this on the charts later today. So right now, what I said sounds like double talk, and there's no reason why it shouldn't, because Elliott Wave theory has a lot of, I think, not ambiguities, but a lot of ways out. So if you have something that looks obvious and doesn't happen, there's a way out. It's kind of like going back to the astronomer Copernicus. Copernicus had all the planets going around the Earth in circles. Or did he have it around the sun? No, he had it around the sun, I think. In any event, he had circular orbits. But circular orbits were incorrect, because obviously Kepler showed us that they're elliptical orbits. So what did he do to compensate for the circular orbits being incorrect? He drew epicircles to compensate for the planet not being where it ought to be according to circular orbits. So these epicircles were his way of compensating. I better go look back in my science books. It's shameful that I don't remember whether Copernicus, of course, I think did have the sun as the center of the universe, of our universe. But the epicycles compensated for the circular orbits. Of course, everything wanted, at the time, the circle was like an obsession. Everything had to be in circles. So it wasn't until Kepler that we got the correction of the elliptical orbits. Well, the same thing is true with Elliott Wave in a way. I don't know if my analogy is great or not, but Elliott Wave has ways of compensating for things that should be that aren't. So I'm not knocking Elliott Wave theory. I'm sure it has its merits, and there have been Elliott Wave gurus who have made some great calls through the years. And it's a convenient thing to look at when you're trying to decide whether the sell-off we just had is truly a bear market, the beginning of a bear market, or an ABC type correction, normal correction like we've been having throughout this bull market. I think I've said enough of this, and I probably got you more confused than you were before you started. I know I'm more confused than I was before I started. So I'm just going to ask you to subscribe to this confusing vlog. And hopefully Dr. J will be a lot less confusing at the end of the day when I look at the charts and share the charts with you and we figure this out together. How's that? So be sure to subscribe, share the link with your friends, write comments, like us. Adios, amigos. See you later, alligator.